Good morning, esteemed guests. My name is Brook Taye. I'm the Director General of the newly established Ethiopian Capital Market Authority, the apex regulator of the Ethiopian capital markets. I would like to start off by saying a special thank you to the UNECA, Bill and Melinda Gates Foundation, and FSD Africa for the special support provided in organizing this exciting capacity building workshop, which illustrates the strong backing towards establishing capital markets from our development partners as we work diligently to realize the launch of the Ethiopian Securities Exchange in 2024. The launch of the capital market is one of the government's key economic reform elements in the homegrown economic reform agenda, as shown by the successful ratification of the Capital Markets Proclamation in 2021, which included the establishment of the exchange by law, the first securities exchange in Ethiopia. The capital markets provide a critical avenue to address our development goals by helping fulfill both the public and private sector capital needs for the development of the country. The presence of the capital markets significantly promotes and provides additional new options and instruments for investment, as well as improving access to finance. With extensive effort and collaboration between the key market stakeholders, including the exchange, the Capital Market Authority, the National Bank of Ethiopia, Ministry of Finance, and the market intermediaries, along with the many technical support from development partners, we can gradually and successfully achieve the access to finance levels achieved in other countries with existing capital markets, bringing positive results to the wider economy. The main outcome of this effort is to successfully help elevate millions out of poverty by increasing access to capital. The Ethiopian Capital Market Authority is now fully established and has already delivered and consulted on some of the key directives going through the public consultation phase with the relevant stakeholders. The authority has been extensively engaging with the public through various means and continues to develop the nascent capital market. The principal objective of the authority include to protect investors, ensure the existence of a capital market environment in which securities can be issued and traded in an orderly, fair, efficient, and transparent manner, reduce systemic risk by ensuring the integrity of the capital market and transactions, also to promote the development of the capital market by creating an enabling environment for a long-term investment. The exchange will be a key part of a broader ecosystem of institutions, markets, and participants that make up a functioning Ethiopian capital market ecosystem. Putting in place a successful securities exchange heavily depends on involvement and participation of market participants, including issuers, investors, intermediaries, service providers, and policymakers. As the development of this market intermediaries in Ethiopia is at its early stage, both the authority and the exchange are required to play a leading role in the development of securities market, including market awareness raising, increase investors' appetite, build market attractiveness to issuers, build capacity of capital market participants, and educate the general public. The development of capital markets can contribute to changing the dynamics of how both public and private sector fill the gap for long-term finance and investment, as has been seen in countries across the world, to drive economic growth in a sustainable manner. Within the public sector sphere, the development of a liquid and deep government securities market has the potential to make a significant dent in the government's existing financing needs and expand opportunities for government to finance in its future finance needs through market-based instruments in a sustainable manner by issuing longer dated bonds. This can be achieved, among others, by focusing on domestic and local currency bond issuances, targeting both existing fixed income investors such as pension funds and commercial banks, but also expanding and diversifying the investor base by tapping into a larger retail and institutional investor base, both local but also foreign investors, which is only feasible in the presence of capital markets, helping capital flow more efficiently between issuers of financial instruments and investors. Efficient capital flows in turn fuel innovation, product development, and create more jobs and prosperity. The development of capital markets will also provide and enhance the existing practice of raising long-term finance in the form of equity for the private sector, which is dominated currently by the financial sector, and expand this to other sectors of the economy, as well as by adding a portfolio of debt instruments in the form of corporate, municipal, and newer innovative thematic instruments such as suk-suk bonds for both financial and non-financial issuers. Companies can also access short-term finance to fund working capital needs through money market commercial papers that can be quoted and traded on the exchange. Debt capital markets offer significant benefits for central banks and the wider economy. Developing a market-based T-bill market is a central building block for establishing a yield curve which can be used by policymakers to gauge inflation expectations and market expectations of the path of interest rates, helping central banks conduct monetary policy more effectively and help sustain overall economic stability. In addition to being a key element in the development of a liquid bond market and for the transmission of monetary policy, a benchmark yield curve is also a key anchor in the pricing of other debt instruments. Furthermore, a well-functioning interbank market contributes to the efficient allocation of capital in the economy, providing a well-tested tool in the implementation and transmission of a monetary policy as central banks globally use the short-term interbank market to monitor and influence prices, the liquidity of the banking system, and the structure of a short-term interest rate, thereby stabilizing economic cycles. Given these benefits, which are supported by observation in other financial markets across the world, it is very critical to develop and build the surrounding markets and trading infrastructure to facilitate an efficient interbank market in Ethiopia. To conclude, I would like to reiterate that the Ethiopian Capital Market Authority is fully committed to supporting the launch of the Ethiopian Securities Exchange and will work closely with the exchange team as it becomes a fully fledged securities exchange over the next year. With no legacy systems or vested interests, the exchange will be a modern, multi-asset securities exchange featuring an efficient, automated trading system and trading platform, supported by a state-of-the-art central securities depository to ensure seamless trading and post-trade settlement process from its inception. The exchange and the authority will work closely with the relevant intermediaries to prepare them for the launch of the market through a series of tailored trainings, workshops, and a public consultation to ensure the successful launch of the exchange, of which this technical workshop will be the first. Having the exchange in place will allow the listing and trading of government securities on the secondary market, significantly enhancing participation in the primary market as investors can trade these securities in the secondary market without having to hold until maturity, as is the case now. Increased participation in treasury bill market by a wider set of investors can help lower the cost of funding for the government. I encourage the financial sector in particular to evaluate the wide-ranging benefits the exchange will bring to the economy and the industry in particular. Capital markets will unlock new business lines for the sector as capital market service providers and present a means to expand and help innovate the capabilities of the domestic financial sector as you evaluate the proposition of becoming licensed members of the exchange as a service provider as well as users of the exchange trading platform for your treasury management function. I sincerely express, may this be a fruitful and successful event. I thank you.